right, happy Monday, everybody. First, I want to look at Bitcoin. It's down. Oh, there it goes. The market's closed about an hour now, and I've been saying in the 70s, and it's looking more like it. Bollinger's, this is the green line here, and the red line here, are starting to expand. The upper band is starting to turn up, lower band is starting to turn down. So we may see this red candle ride down, into Christmas, maybe longer. We'll see. So that's Bitcoin. There's a lot of volume up and down on it, so it could go either way. But the fact that it's expanding on the Bollinger, that's a 20 Bollinger band, 20 period, which means it's expanding. We're going to get into a tighter range, and it's going to ride one way or another, or an expanded range, and it's going to ride one way or the other. Looks like down. So I'm thinking we're going to see this till we get more info. Anyway, nothing to worry about there. What did I buy today? I did not buy any of the degenerate high yield funds. What I did this weekend is I went through all the funds we cover, and I added some more, and I'll show you those. The annualized total return with DRIP and without DRIP. And all the ones I own, I put them in. And all the ones I don't own, if they're negative, I left them out. Just wanted to show you. I own COYY. It's down 74% annualized with DRIP. Only down 55% without. So what did I do? And I see this with all the funds we own. I turned off DRIP on the funds that are down in NAV. TSYY, only down. That one I didn't turn off because it's only down 12% with DRIP, 17% without. So I altered the DRIP. I was dripping everything. I want to get more focused on what's working, what's not. And, my goal was, I've been doing this for a year. I think the YouTube started in August, so not a full year. But I've been investing in these for a year. And the goal was for 1 year, chase the yield, just, invest in the maximum yielders, which I've done. I own 22 of these now, never sold them. I now have a base of income that if I just stop doing anything, I will get paid that income. Is it guaranteed? Of course not. It seems like it's gone down some on most of these. So now I want to go to more total return stuff. Not necessarily safer. I mean, it's a little safer, but I'm still high risk. I don't take any money out. I just want to, maximize my retirement, which is 3 to 5 years. So anyway, we're looking at yield boost here. Actually, let's start from the beginning. We start with REX shares. We cover them first. They declare today. Looks good. 1, 2, 3, 4 of them have a total return positive. Some of them are new, but look at Walmart. That's the best one. Total return with DRIP, 144%. That's annualized. It hasn't been around a year. Without DRIP, 142%. NVII, 74% with DRIP, 73% without. And you'll notice if it's up in total price versus launch price, it's better with DRIP. If it's down, it's worse. So I turned off DRIP on a lot of them. Again, I don't own any REX shares yet. I thought about buying the WMTI, which is the Walmart one, because look at that, 144%. That's total return. They launched it, I think, $25 or $28, and they're paying 33% yield based on the last 3 distributions, which how I do things. So anyway, that's REX shares, solid. Yieldbacks. The best one is a Target 25. I added the Target 25s. I put them at the top because they declare today, and I put those in. MSST on MicroStrategy, Target 25, pays 25% yield, 25.25. It is down total return, so I didn't even put it in. NVIT, which is on NVIDIA, Target 25 is paying 25% yield. It is also negative in total return. I didn't want to put them all in because this took hours. So hit the like just for the work. And, of course, not financial advice. You guys know that. Consult with a financial advisor. Do your due diligence. And, but it's good research here. I mean, the test, which is the Tesla one. Tesla's on a tear. We know this. Up more today. All-time highs. They've only paid twice, 25 cents, 26 cents. That's weekly. 24% yield. 185% annualized if you drip. 184 if you don't. So not a big difference, but again, it's new. So we'll see how that plays out. I did it on all the ones I own. Ulti, 0.7 positive with drip, negative without. So I'm going to continue to drip my Ulti. YMAX, again, if it's in blue, I own it. YMAX, 27% annualized. Again, this is distributions plus price gain, and it is, YMAG didn't do a reverse split, but this is all split adjusted. So this is, as of right now, December 15th. YMAX, 17% annualized with drip, 13 without. So again, if they're up, then the drip is better. And I'm just going to run through these. I put in all the ones that are positive. I left out the ones that are negative. But you can see a lot of positive returns. There's a negative here on Fiat because I own it. I put in the negative if I own it. So Fiat, negative 40% annualized, 22% without drip. So I turned the drip off on Fiat. But it is paying a 94% yield. So I'm just going to keep collecting those distros, but I'm not reinvesting them on Fiat. So if you catch the drip there. But look at this. Hui, 118% with drip, 111% without drip. I don't own it, but I'm going to start keeping an eye on this more so than the yield. Like I said, my goal was a 5-year plan. First year, chase the yield, buy the yield. And now I'm seeing that a lot of them are not keeping up with that yield. A lot of them are, if they drop 10%, but they pay a 12% distribution over that time, that's fine. But a lot of them are not keeping up with that. So, NAV erosion, if you want to call it that. So I'm looking at that and, readjusting things. Murni, you guys know I own that. 81% yield, but down 41% total return, annualized total return with drip, only down 17% without. So I turned the drip off. Misty, got to talk about it. 98% yield. Again, it's all split adjusted. No, full transparency, no fake numbers here. 47% annualized return, and that's since inception. My Misty, I think, is 48% total return because I did not buy it at inception. But I think it's 48%. I have been dripping, but look, 63% without dripping, so I turned that off. PLTY, I think that's my best performer. I think it's 58% annualized for me. It's 137% with drip, annualized. Not since inception, just, it takes the inception price, annualizes it, 137. Without, 100%. So, great fund. So I continue to drip that one. SMCY, down 32% with drip, annualized, 21% without, down. So I turned the drip off on that one. Tesla, I'm keeping the drip on. I'm actually up better than 17% because I bought it after inception. But overall, annualized 17%. Without drip, 3%. So I kept the drip on there. You get the gist. Let's look at Defiance. Best one is AMDU without drip, 101%. This is annualized total return. So we can compare apples to apples because they all launch at different times. But this is annualized, so it compares them on the same playing field. MST I do own. I need to put that in blue. Annualized yield 207%, but it's not keeping up with it. They did a 1-for-4 reverse split from $2 to $8, which I don't understand. I thought they'd do at least a 1-for-10, but they didn't. So it's at $8, but it's paying a massive yield based on the last 3 distributions and the current price. But annualized total return with drip is down 136, without 105. Down. So I turned the drip off on that. SMCC, same thing. I turned the drip off on that. IWMY, one of the first funds I owned of an option ETF. Not a lot, but I do own some. I do drip it, and I will continue because it's 12% annually with a drip, 7% without. So you're getting the gist. Yield boost, you think they're paying massive yields, that none of them would have a positive total return, but some do. COYY I do own, but I put in the ones I own. Those are negative both ways, so I turned off the drip. TSYY down more without the drip, so I left the drip on. Down 12% annualized return, massive yields, 136%. AMYY is the winner. I don't own it, but it's 54% annualized total return with drip, 51% without. And I think this is, a better thing. We've been just looking at yield, that was my plan. Year 1, just stack shares, get income, drip them all, get more shares. Now we're getting into year 2. I was going to do this in January, but I had a long weekend, and I was able to look at this stuff, and I really want to focus down on what's best for my portfolio, and I wanted to share it with you. So NVYY, 50% with drip, annualized return, 47 without. So I'm keeping the drip on there. I do own that one. So on and so forth. IOYY, it's a new fund. When they're brand new, you're not going to get the total return positive unless it goes on a run. But 27 down with drip, 24 down without. So I turn the drip off on there. And just we'll reassess these every week. Can't do it daily. It's just too much work. So please hit that like. Income Blast. This is from Tuttle Capital. Again, brand new. Launched at the worst time. But they are both down quite a bit with drip and without. So I turn the drip off on both of those. And we'll just let our shares ride and see what changes. And then we may turn it back on or add more money. But and I don't know if you can do this with other brokerages. I use Robinhood for these. You can turn drip on and off for individual funds. It's in your settings. If you want me to do a video about that, I will. I did add... What did I add? I added something. X funds. Blocks and GX. You guys are Blocks fans. So this is Blocks. These are both weekly. They also do a FIAX, which is monthly. So I'm not going to cover that just yet. But Blocks pays 36% yield. Their annualized total return with drip is 34%. Without is 37%. So no drip there. I don't own either of these right now, but I want to look at that for you guys because I know a lot of you own Blocks. GX, also, Nicholas whatever. That's a global equity. And they're averaging 16 cents a share per week, 51% annualized yield, 9% total return annualized with drip, 8% without. So if you own that, you may want to drip it. Roundhill, and this is, I'm going to show you what I bought today. I'm missing a column there. I don't know what happened. Anyway, WPay is positive, better without drip, 11%. YBTC, better with drip. XDTE, better with drip. QDTE, better with drip. And these are all annualized total returns based on drip or no drip. And that drip for some of you is dividend reinvestment purchase or program. You basically turn it on. Every time you get a dividend, you buy more shares of it. Automatic. You don't have to mess with it. But you see a lot of positive with Roundhill. I only put in the positives here unless I own it. And I don't own any Roundhill till today. Google, GooW, $71, paying 51%, but annualized total return with drip, 187%. Guess what? I bought it. I turned drip on. So that's my, I used to buy we do the top 15. I didn't do it this week, and I apologize. I was out of town. And I used to just buy the number one, which has been ICOI, which I'll get to in a minute. But this is going to be year 2 on how I'm going to do it. I'm still going to cover the high yields and, the dividend degenerates. But my plan is going to focus more on this, total return annualized. That's distributions plus NAV gain or loss. And obviously this is gained. I think they launched at 50. They're at $71. So super solid. Bitwise, you guys know I love Bitwise. IMST is better without drip, still negative. But look at ICOI. ICOI, massive yield, 217%, still a positive 4.7% annualized total return with drip. Without, it's better, 29, almost 30%. So I turned off drip. And I'll reassess these every week. IMRA, I do own. It's positive, barely, without drip, negative with drip. So I turned off drip on that one. So that's the spreadsheet. That's the funds. That's what I'm doing today. I did do a quick options update on... I'm just going to show you here because I did other stuff I don't want to talk about. These are all the option plays. But I just want to talk about the Soxhole that we've been talking about. And we'll get into the other stuff later. But on Soxhole... Remember, we sold a put December 1st. That was a Monday. Friday expiry of that week. We got 118 credit. It was 119 minus the 67 cents in fees. 118.33. Risk 38.50. 3%. Annualized 159% yield. Then, this past week, we didn't get filled on Monday. We got filled on Tuesday. On a 44.50 put, we were assigned at 44. We can actually put that in 44.50. So we own 100 shares at 44.50. And then we sold a call, and it did fill today. Let me show you on that real quick. We're just looking. Let's just look at the Soxhole stuff. There we go. So we own 100 shares now at 44.50 right here. It's at 41, so we're down. But we sold a call at 46, and Soxhole's at 41. So safe right now. Only if Soxhole goes above 46 do we get a sign. But if it does, our cost basis is $44.50 minus the credits we received, which is almost $300. So, we're in good shape there. Again, not emotional. No rolling, Nothing. Weekly plays, we set and forget. We'll see what happens Friday. We don't touch it. So we did sell the 46 call for 114 credit minus fees, which we'll get into once it either gets assigned or whatever. But that's safe. Then I sold another put on Soxhole. Expires Friday at 38. It's at 41. So that's safe for now. We sold it for 88 cents, which is $88 on 100 shares. We could buy it back now at 76. A little bit of profit, but we don't do that. We don't get emotional. We set it, we forget it, and let it play out. If it expires, great. If it gets assigned, we sell calls, and we don't maintain that at all. That's the coverage. Let me know what you think. Let me know what you think about the new kind of, instead of the high yield, which we'll still cover, because, if some of you are in degenerate phase, I still am. But now I've done this for a year. I've got a base of income that's coming in. Again, not enough to retire on. But now I want to start putting into stuff that's going to still pay a yield, but also a positive return on investment. And we'll just let the others ride. Some will drip, some we won't. Let me know what you think. So please do hit the like. Again, remember, not financial advice. I am not a financial advisor. Do your own research and talk to a financial advisor. I am not one of them. Other than that, have a great day. There will be no video tomorrow. Tomorrow's my long day at work. And we'll talk about something on Wednesday. Have a great day.